Hello friends, welcome back, and we're going to check out Link versus Bitcoin and Link versus dollars here. But we're starting off with Link versus Bitcoin chart here on TradingView, and looking towards what we had in mind here and how we've and the 39,000 line that we had in here. Now we've had this drawn in for a while. If you've been watching along with the videos, you know that already, and we knew that this is a potential area for profit taking. We call these lines basically any line you see on the screen, just consider it a profit taking / risk management line. And of course we knew that that's where that was, so it's very nice to have seen it come up there and give it a wee kiss. Now what's happened since subsequently? Well, the price has come back down here to the 21 EMA on the 4-hour chart. Let's take a look and see if we can see some sort of divergence operating between these previous two lows here. And you can see on the RSI there's a touch of bullish divergence, and on the stochastics there isn't, but on the MACD there is. So that's kind of, it's sort of given us a little bit of hope here with this doubly bottom area afterwards that has actually got divergence in a sense, class B across there and towards the upside as we tackle this 21 here and look towards again that 39,000 Satoshi area. Right now, taking a look at this in terms of the trend sort of indicator that we have, the DMI plus and minus having crossed over each other here, and and coming up towards trying that ADX. Could we see that there come up there above it? Of course we could. I didn't actually see the ADX getting pulled in here towards this area as they were crossing, like you do over here, for instance, whatever. And that would be better to have seen it like that, but what are you going to do? And let's just, did I look at the moving average? I didn't look at the moving averages on Bitcoin. I forgot to do that. Just remembered. Whatever, it doesn't really matter. Anyway, you're interrupting the ChainLink video, Rocky. Get back on the track. So yeah, so that's what we're looking at really for that there area. Can we sustain it up above here? If not, then obviously the next part down is 35. So there's an awful lot of trading activity to be had in and around these areas. Don't need to measure it out too much, but you're looking at 5% just to go down to that area. And of course, even in this wick alone, what's this wick look like from a downward perspective? That's another 5% down. And in terms of the upward side on this here, just this thing here, that's 7% really. So, a lot of money to be had there, just sat on the table in terms of looking for the longer play, which is totally fine if that's what you're doing as well. But you're not looking to the 4 hours if that's the chat. Let's look over at 24 hours and see what's on the go. So between this low and this low, as you can see here on the MACD, there's no divergence. On the RSI, none. On the stochastics, none. And the trend, well, the trend is actually done more kind of like the opposite as we saw on the 4 hour, where the minus, the red one, crossed over the positive and has come up and has tried to get in and around here. But of course, because this wasn't sucked in and around the area, it came up and it tested it and it came back down. So we're kind of in that in-between area where these are converging currently. And we're looking at it kind of asking the question itself, what can it do about things? Could it actually continue to go on down, sink on down and test off this 50% thing? I feel like, we have to be aware of that. And if you look to where the current price is right now, this horizontal line, this blue one where the current price buy mark is, you can see that we're right here at the resistance here of the neckline potentially of a head and shoulders, which is could form if the prices go up here above this 236 and sink back down again, or indeed it doesn't need to. That's just the head and shoulders, like any pattern, is just a way of retrospectively describing the price action at the time, so that it saves you your word count. Essentially, it's just the same sort of thing here. If we were to get that and move on down again, even without the right hand shoulder, let's look at the dollar prices, and you can see here that we've done the same sort of a dealio. And thank you, Technical Analysis, for working out for us in terms of giving us targets to manage our risk around in terms of just the immediate future. So in yesterday's episode as well, we were looking at this area, the $2.32, and could we get up there, test that area, and see about the 236 and the 786 here of this other Fibonacci retracement. Or indeed, would we manage to go on down at the time? This here looks like that it was, in terms of being a bear flag, we pointed out yesterday that this could have been in a sense, but it was sloping down the way. Therefore, it was a pretty crap one. It's not one you want to see. You want to see them going sideways or up the way. And well, we've had the sort of the expected, I suppose, outcome from that. You could say the statistical likelihood outcome from that, and that we've gone up and tested there. Now, is it worth keeping it on as is? Not really. So I'm just going to remove that for now. and we'll have to wait and see how things respond in and around those prices. You know, towards the downside, of course, you're looking at $2. It speaks for itself as a level. So, you know, that's what that is. And let's take a look at the other place, Binance, right? And see here, now we had this sort of this chat on this one about whether or not a symmetrical triangle, and of course if there was some sort of measured move, and I know we could do this in very different ways, but if we're to be one, then you're looking way up there towards the $3.20. Now we're not going to get ahead of ourselves because we know that there's this area here, and it's even further way over on Binance where that Magnolia line is at $2.40, $2.38 there. So we have to go up there and test that. That's a 786 there, but we know that it corresponds in around 236. Actually, the 236 is right where we are now, anyway, around $2.20. So there's this zone here essentially that we're looking at right now in terms of managing risk and everything else as well. Certainly for our chart, you've got the 200 simple, 200 and 233 exponential and simple there up above. So put the 200 simple to 200 just to see where that's coming in at just now. And yeah, it's almost exactly the same place. So you're looking at that there as being your upper side resistance. Should we go up here, break above it, then of course, you know, then you've got structural changes happening in the market, but you're not seeing like sort of glaring signals down below that would happen. So I've got to consider all of that to be greedy. So that'll do, I suppose, for today, and I'll catch you in the next video. Thanks for tuning in. Thanks for being a Rocky Outcrop tician and liking and subscribing and all that jazz. 265. That's just amazing. Let's keep the ball rolling. See you in the next video.